market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Friday and welcome to The Pulse. I'm Francine Lacqua here in London. So the world's most anticipated IPO is finally upon us. In just a few hours, SpaceX will go public in what will be the biggest listing ever. Goldman Sachs has a leading role in the initial public offering, and there's nothing quite like a bit of healthy competition. This week, President Trump praised Citi for its position as a top advisor on M&A, and that would have come as a surprise to Goldman Sachs, whose executives have been touting their major lead in M&A rankings. Now, just recently, the Goldman president said, "We have our largest lead ever at this point in the year." Hope I did not just jinx that. Now, welcome. Of course, I'm delighted to be joined exclusively by John Waldron, President and Chief Operating Officer of Goldman Sachs. John, it was a funny comment that we picked up on also because you were adjacent to the news because of that Citi comment. It's an exciting day. M&A is thriving. How are you doing in M&A overall?
Thanks for having me, Francine. It's always nice to be with you. We're doing exceptionally well in M&A, and the M&A market is doing exceptionally well. We're going to see a marketplace this year that I think will likely be a record year. The record year was 2021 with $4.6 trillion of volume. We're now at $2.5 trillion of volume for the marketplace as a whole. Goldman Sachs is approaching $1 trillion of volume in terms of the deals that we've been working on, so we're doing quite well in the overall scheme of the marketplace. We have a little over a $300 billion lead in the league tables, kind of any way you look at it. So we're the number one ranked M&A advisor in the world. That's a position we've held now for over 20 years in a row. Very important business for Goldman Sachs, and we feel terrific about our position, but also about the broader marketplace. Okay,
and we'll get back to that in a second, but the SpaceX roadshow has wrapped up. Shares, of course, pressed last night in New York. What are you focused on today on the first trading day?
Well, it's a momentous transaction, and I want to start by congratulating SpaceX, a company, Elon Musk, his management team, his employees, and it's an extraordinary day for the company. We were privileged to be the lead left book runner on the transaction. As you said at the outset, it's a $75 billion IPO, the largest in history. I think it presages the beginning of a pretty sizable wave of IPOs, which we're excited about. I also think it shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space, which is quite exciting.
Can the markets absorb two other big IPOs from here until the end of the year?
Well, a couple things to say about the IPO market. The IPO market historically has been a couple $100 billion of volume for the last 10 or so years. We had 1 year in 2021 where it spiked to $600 billion of volume, led by SPACs and other activities kind of in that COVID era that were not sustainable. But really, it's a marketplace that's been $150 to $250 billion for most of the last 10 or 15 years. Year to date, prior to today, the marketplace would be about $95 billion of global IPO volume. So we're now, with this IPO, moving towards $200 billion of volume. And my guess is if you think about what happens for the second half of the year, we could see global IPO volume approaching $300 billion, $250 to $300 billion, which is large, but it's not in the scheme of the historical precedents that large. No. And most importantly, because global market cap has grown so dramatically in the last 5 or so years, as a percentage of global market cap and global float, it's only 14 or 15 basis points of total global market cap, which actually in historical terms is not that large. So we've not been particularly concerned about the overall dynamics. Obviously, investors make their decisions on individual companies, but the overall dynamics, it feels, it should be very well supported.
I mean, I think in the last 2 weeks, you've helped SpaceX, but also Alphabet put together plans to raise nearly $200 billion.
We did.
That's really quite incredible.
Last week, we raised quite a lot of capital for Alphabet. This week, we raised quite a lot of capital for SpaceX. Our position in that marketplace continues to be very strong. But most importantly, the capital markets are demonstrating a willingness to finance these extraordinary companies as we build out this AI infrastructure. And I should call out our team. It's extraordinarily proud of our team, across our technology franchise, our equity capital markets franchise, our debt capital markets franchise. We're really executing well, and we're very proud of our team.
John, because today is such a big day, right, for SpaceX in New York, a lot of people, of course, kind of remember the Facebook IPO back in 2012, where there was just concerns about it working on the right day. Do you know of conversations with NASDAQ having happened so that today goes smoothly?
Well, I would say that many of us have been preparing for this for a long time. So I think you should assume that whether it's Goldman Sachs, NASDAQ, other underwriters, the broader marketplace, a lot of preparation has been put in place for what we expect and hope to be a very good day today.
How do you make sure that there are options for retail, I guess, investors on SpaceX?
Well, there are plenty of options being put in place for retail, and I think that I'm not overly worried about whether those options will be in place. I think you'll see plenty of opportunity for retail to invest.
Do you see exuberance in equity markets, and is that a concern going forward, given all the forces? With it, it could be AI, but it's also everything that we're seeing in the Middle East with inflation creeping up. Yeah,
I think if you look at the global equity marketplace, we've obviously seen an explosion of valuations. The global equity capitalization is about $150 trillion now. Over half of that is in the United States. Yeah. So the U.S. has been the preponderance of that growth. Mm-hmm. Valuations, if you look at S&P multiples, are around 21, 22 times, depending on how you look. Obviously, they're higher for the more tech-centric part of the economy. On an equal cap-weighted basis, it's like 17 times, which is really historically a little on the high end, but not an extraordinary or demanding valuation. So yes, they're high. On a price-earnings basis, they're also high, but not totally out of bounds. And so I think the fundamental premise is right now earnings growth is extraordinarily strong. Right. Q1 earnings growth for the S&P 500, 28%, well above any historical norms. So it's not as if the market is actually driving valuations materially higher right now. Right. They're according similar valuations on a much stronger base of earnings. We'll see if that continues. But right now it looks as if the marketplace is reasonably rational about the earnings growth. And I think the bigger question is, how does the returns on capital invested in this AI infrastructure build transpire, and how do they transpire across the enterprise landscape?
When you look at these mega IPOs, does it make it more difficult for smaller IPOs to get in?
I think there's a risk that we have a crowding out effect. Yeah. I think there's a risk across the capital markets, not just in the IPO market, that those things that are more in the slipstream of AI and AI infrastructure and compute are going to aggregate more capital, and that those that are not in that slipstream have a little bit tougher time. I think we're still in the infrastructure build. I'm expecting at some point we get into the deployment phase and the application phase where you start to see it filter through a broader part of the economy. And the companies that do a really good job with that, I think, will attract enormous amounts of capital as they're proving the theory of the case that they're actually getting good returns on their own deployment of tokens and compute, and that probably will level things out.
I mean, speaking of tokens, as Goldman embraces AI, one thing that we're hearing from a lot of the banks is actually tokens are just getting more and more expensive. I think in some cases, employees, token costs are bigger than their annual salaries. Like, how do you think about that?
Well, I think that most enterprises right now are preferencing adoption, literacy, innovation, experimentation. Yeah. So we're all trying to find ways to have our employees better understand how these tools can be valuable for them. And that's a more expensive mechanism because you're not really micromanaging, the ROIC on every token that you're using at this phase of the development cycle. I think that will start to change over time as people get a little bit more rational about where they want to spend tokens and where they don't, and what kinds of models they want to use for what purposes. So I definitely think we're in the phase now where it's a little bit of roll it all out there and let it run a bit, which I think is rational. We have a lot of learning to do. Over time, there'll be a little bit more discerning behavior, I expect, on how you deploy those tokens and what returns you expect.
What does discerning look like? Is it possible caps on the amount spent, or is it?
I think every company will have its own approach to doing it, but I think fundamentally you look at use cases and you try to determine how much compute do I need to generate to have this use case go to what I expect it to go to, and what kind of returns on invested capital do I want to see, whether it's productivity unlock, more efficiency, more revenue growth because I build tools for clients. I mean, at Goldman Sachs, we're focused on probably 4 major vectors. One is literacy and adoption. One is software development life cycle. Use cases around process re-engineering in the firm in terms of things we do that are less automated that become more automated. And the 4th vector, which ultimately is probably the biggest and most exciting vector, is tooling that we can build for our clients to make our relationship with our clients stronger and our value proposition more significant. And if we can do that effectively, we will differentiate our firm. And I think that that all costs tokens. We will develop an ROIC metric across all vectors over time. Right now, we're not going to be myopically focused on every microeconomic of that.
I mean, does the rollout or implementation of AI actually, kill or affect jobs?
I think we don't know, is the honest answer. We've said publicly, and David Solomon wrote an op-ed that I think was a very effective op-ed, that the labor market is much more dynamic than is commonly understood. There's a lot of job creation and job loss in any given year, and certainly in the United States, and I'd say, across the globe, although the U.S. tends to be a bit more dynamic in that regard. So I think when you look at the broad labor market, it's unclear to us that we're going to see significant job losses. This may be like every other innovation where you have a lot of new jobs created and you have some disruption along the way, but you actually end up with more employment over time and more productivity in the economy. And my guess is this probably moves in that direction. Okay. We're going to learn a lot in the next handful of years.
What's your take on Europe?
So I've been here now a couple days. I was actually at the Founders Forum yesterday. You and I were just talking about that off stage, which is a venture forum for entrepreneurial companies in Europe, extraordinary companies. I think that there's too much pessimism, in my view, about Europe. The default setting seems to be pessimism as opposed to optimism. There's a lot of great innovation happening here. There's an enormous intellect in this part of the world, just like there is in other parts of the world. There's no difference in the intellect here. I think risk capital is the single biggest question. Back to your questions on SpaceX and Alphabet. The amount of risk capital that permeates the American capital markets is extraordinary and really one of the secret sauces of America. And I think that Europe needs to find a way to generate more of that risk capital. And then I would say, from a competitive standpoint, operate more as a single market. The promise of Europe was always this great single market that would be equivalent in size to America and China. And it hasn't really come to fruition, largely because I don't think it's really operated in a way to allow it to be a single market.
Europe is changing, right? The margins because of the extra spend from Germany. I mean, again, it's a complicated region, like many regions at the moment. When you speak to CEOs, what do they need?
Less regulation, less bureaucracy, more of an ability to tap into all these markets on a more unified fashion, and more risk capital.
When you look at, so we're talking about M&A. I mean, do you still have appetite at Goldman Sachs to do, are you on the prowl for some big M&A?
Well, if you look at what we've done over the last year, I would call out 3 transactions, 2 of which were acquisitions. One was a partnership. We bought a business called Innovator, which was an ETF platform. We bought a business called Industry Ventures, which is a venture capital private asset company. And we partnered with T. Rowe Price to build multi-asset solutions primarily geared towards U.S. retirement and U.S. wealth. All 3 of those transactions, not extraordinarily big in their own right, add to our product and solutions capabilities across our asset and wealth management business, add to our distribution capabilities. We want to do more of those. If we can find more situations that look like what you've seen us do thus far, we would like to find more of those.
I mean, is it fair to say they were capped at like $5 billion?
Well, I'd say the acquisitions were, kind of plus minus $1 to $2 billion.
Okay.
So in total, between that and however you want to value the partnership, these are not in the scheme of a $325 or $30 billion market cap. These are not large transactions, but they add to our capability set. They add to our growth. Yeah. They make our value proposition with our clients stronger, and we'd like to find more opportunities to do more of the same.
When you look at the U.S. economy, I mean, you sit just on so much data. Is there anything that looks unhealthy? Is the consumer worried? Do you see any defaults? Is there something that, the Fed should be looking at?
I see employment, maybe surprising to some, continuing to be pretty strong and fairly tight. I see a lot of nominal growth. Yeah. Obviously, the AI infrastructure build is a significant stimulus to that. I see U.S. consumers continuing to behave in the traditional U.S. consumer way, which is to spend, a reasonable bit of their household income. I see an enormous amount of household wealth that's been created, $180 trillion of household wealth in the United States, which is a little over 8 times the household income. That's at an all-time high. So you're seeing a significant amount of wealth created in the stock market and other financial assets. And I see a fairly healthy amount of inflation. So I think you're going to see more nominal growth and probably more inflation for some time to come, but the consumer continues to be pretty strong, and I think that's fundamentally important to the U.S. economy.
Okay, John Waldron, thank you so much for joining us. Don't be a stranger. Every time you're in London, we're expecting you now on the set. John Waldron, President and Chief Operating Officer of Goldman Sachs. Now, let's also go back to one of our top stories and bring you more on the SpaceX IPO, as the initial share price of the rocket and AI firm could jump 35% higher from shadow markets. Now, I'm joined by Matt Bloxham, intelligence analyst at Bloomberg. So, Matt, what can we actually expect today, the first day of trading?
Yeah, I mean, I think a lot of excitement, and I think certainly the talk that there was over $100 billion of retail demand for this IPO suggests that we are going to see upside in the share price, and the prediction markets and the futures markets and the crypto markets all pointing to that kind of 30-35% upside. So it's going to be interesting to watch for sure. And obviously, Elon Musk, if that happens, on paper at least, becoming the first ever trillionaire. So quite an incredible day, really. It
is quite an incredible day. What's the path ahead then for Elon Musk and SpaceX?
Yeah, so I think very near term, what I'm really focused on is the SpaceX Starship next launch. So that's due late June, early July. Starship is incredibly important to so many of SpaceX plans. So that's the next test launch where people will be looking to see if that goes well and it takes on more commercial and fundamental significance. Beyond that, there's a lot of focus on what's going to happen with Tesla and the relationship with SpaceX, with a lot of people now thinking it's a question of when, not if, Elon Musk moves to merge those two businesses. Right now, they're kind of quite tied by Terafab, which is the new chip joint venture, and people expecting that there's going to be some kind of tie-up between SpaceX and Tesla, maybe within the next 12 months.
Matt, thank you so much. Matt Bloxham, there, tech analyst at Bloomberg Intelligence. Now, coming up, the European Central Bank delivers its first rate hike in 3 years. We'll discuss the path ahead as policymakers across the world grapple with inflation pressures. That's coming up next, and this is Bloomberg. Welcome back, everyone. Now, we are getting a little bit of breaking news out of the U.S. and Iran. Now, earlier this morning, President Trump was insisting that the Iran deal was close after scrapping some of the new strikes that he had said. And now we're just getting a little bit, I guess, of a readout from the semi-national news agency of Iran, Mehr. And they're basically saying that the U.S. and Iran Memorandum of Understanding stipulates that the Strait of Hormuz will reopen within 30 days. They're also saying that the U.S. will withdraw forces from the area surrounding Iran under this new Memorandum of Understanding. Now, again, we've seen this in the past. It's almost a little bit of a pattern. Things quieten down, it gets a little bit better, and then they flare up again. I'm not suggesting they flare up this time, but just wait and see what happens over the next couple of days. The Mehr agency, again, this is a semi-official news agency of Iran, actually citing sources close to the negotiation team. Now, Bundesbank President Joachim Nagel says the ECB is ready to raise rates for a second straight meeting if the shock from the war in Iran requires it. We also understand that other policymakers are also open to a move higher as soon as July. Now, we're joined by Konstantin Veit, European Rates Portfolio Manager at PIMCO. Konstantin, thank you for joining us. I mean, there's a little bit of a pattern that if you hike once, maybe it just makes sense to go a little bit more cautiously, but instead of doing one and done. What's your take?
In our baseline, we have 2 rate hikes. I think whether it's 1 or 3 or 2, the important message is this is not 2022, right? The backdrop is very, very different. The negative supply shock is not matched by a positive demand shock. So in pretty much most of the scenarios, there's not that much for the ECB to do. And it's also important to highlight the different starting conditions of the central bank. So if you look at where they are versus their neutral posture in terms of policy rates, then with the Fed and Bank of England being above, the BOJ being below, the ECB roughly at neutral. So, for the ECB to do something now means hiking rates, while for the Fed and the Bank of England, for example, doing something now means probably staying on hold.
Yeah, but Konstantin, I mean, overall, again, does it mean if there is another hike or another 2 hikes, would that be a policy mistake? Because they have one mandate is inflation. If you're a small, medium-sized company in Europe, maybe you're really feeling some of the pain.
Yes, I agree. I was a bit surprised that there was not much discussion around the growth outlook yesterday. So I think the growth outlook that the ECB portrays is a bit too optimistic. But if you look at their neutral range, they've updated their neutral range, which is 175, 250. So if you hike twice, you would be at the upper end of the neutral range. And also keep in mind that core inflation or domestic services inflation hasn't really normalized even before the conflict and was still above target. So I think the ECB called it a robust decision, and I think 1 or 2 hikes should indeed be robust across a range of scenarios. And I think that's also not something that you then would have potentially to reverse quickly.
Do you worry about GDP? The first quarter was a bit softer than expected. What does second quarter look like?
Yeah, the first quarter was soft. The second quarter doesn't look great either. So if you look at the PMIs, they point to marginally negative growth. So you could technically get a recession in the euro area in the first half of the year. So it's quite interesting that the ECB still projects 0.8 in terms of GDP for this year. That's probably a bit on the optimistic side. So we probably see more like 0.5%. Or even lower.
Konstantin, what are you buying right now? So you're PIMCO. What's the one thing that you'd be buying right now? Shopping up.
I think the focus for us is on quality, simply speaking, because this is an environment where you don't have to take much risk, which is beautiful for us here in Europe. We have been 8 years in a negative yield environment where you had to stretch a lot. You had to take a lot of interest rate risk, a lot of credit risk to earn a decent return on your investment. And that's not the case anymore. You can stay short in interest rate risk. You can stay up in quality when it comes to credit risk and earn a pretty good return on your investment. So that's our focus right now. So we're more careful on the economically sensitive parts of the market, lower quality credit, and these type of areas.
I mean, there seems to be a difference, for example, between German bonds and Italian BTPs. Do you load up on one of them?
We remain constructive on the so-called periphery. The spread is around 77 right now. We have been around 60 before the crisis, and we think over time there is room for spreads to compress. Also, given that obviously there has been a change in the fiscal stance in Germany, so you could see over time a conversion in the fundamental positions there, which would argue for more spread compression. So overall, we remain constructive on the periphery.
Konstantin, I mean, the bond market has always been just incredible to watch, but now is really the time where there's such a big difference between what we're seeing in equities and what the bond market, especially the Treasury market, is telling the Fed to do. I mean, does this kind of also play out in the Bank of England and ECB?
Yeah, I think the bond markets are doing their job right now, and you see that across jurisdiction, actually, that the bond markets are now, given that central banks retreat and not involved anymore in the bond markets, that the fundamentals come into sharper relief again. And you see occasionally repricing and a reassessment of the fundamental positions. We have seen this in France, we've seen this in Germany, where the debt brake was basically abolished, and you had a 50 basis points repricing on the 10-year bond in 2 days. So. And yields are very attractive right now. So policy rates are reasonable levels. The 10-year rates are at reasonable levels pretty much around the globe. And if you compare that compared to where equity market valuations are, then to us fixed income looks very attractive.
Okay, Konstantin, thank you so much for joining us on the day after, of course, the ECB with a lot going on the markets. Konstantin Veit, their European rates portfolio manager at PIMCO. Now, let's look at the markets. Traders do remain very wary of a potential deal with Iran, between the U.S. and Iran. Some expecting equity markets maybe to muddle through a little bit due to lingering anxieties and, of course, the upcoming Fed meeting. If you look at markets elsewhere, they're also trying to catch up with Wall Street's chip maker fueled gains from Thursday. Now, what do they really want to see? Look, traders want to see the end of more than a 100-day war that has caused the biggest oil supply shock in history and roiled global markets. Coming up, we'll look to how the Czech Republic is handling the economic pressures Europe is facing with Alice Michl, the governor of the Czech Central Bank. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. SpaceX makes history with the biggest ever IPO, raising $75 billion and putting Elon Musk on the verge of becoming the world's first trillionaire. Iran's semi-official Mehr news agency releases details of a memorandum of understanding to end the war with the U.S. President Trump says a deal could be signed as soon as this weekend. Plus, the Bundesbank president says the ECB is ready to hike again next month, if necessary, after it raised rates for the first time in almost 3 years. So more on, one of our top stories in a few minutes. In the last few minutes, reports have emerged of details of this memorandum of understanding to end the war with the U.S. That's after President Trump said a deal to end the war could be signed as soon as this weekend. Well, Abir Abu Omar joins us in Dubai. So, Abir, what more do we know about what this semi-official Iranian news agency is telling us?
Good morning, Francine. So yes, over the past few minutes, these are some of the headlines that have emerged from the semi-official Iranian state media, Mehr, suggesting that the document, essentially, or the MOU is under consideration. These are some of the headlines. It will stipulate the reopening of the Strait of Hormuz within 30 days. It will unfreeze those $24 billion of frozen assets and lift oil sanctions. Now, just a very important caveat here. Mehr is saying that this MOU or these concessions are pending the approval by Iranian authorities. They cite a source that is close to the negotiating team. It is still unclear whether the text matches the text by Tehran or that was cited by this semi-official media matches the one that President Trump was referencing and was saying that it will be signed in Europe by this weekend. So still some murky details there for us to watch out for, but this time around feels a little bit different because we're getting from this back and forth some positive responses from the Iranian side, again, if we were to go with what Mehr is saying. But we still await an official response from the Iranian government. Until now, we cannot definitively say that those are the same concessions that will be met by President Trump. Lebanon, a very sticking point in all of this. Iran says that the cessation of the war is including Lebanon through this Mehr news that we're getting. Israel has said earlier that it wasn't part of this MOU. So again, some conflict that we're still seeing in those back and forth statements. We will definitely be monitoring the situation and filling in oil prices dropping to around $86 a barrel. So that is something that markets are taking very positively this morning, Francine.
Abir, thank you so much. It always is, I think, encouraging when you have a little bit of detail, but then you're absolutely right. We just need to check whether both sides agree on what detail was put out. Abir Abu Omar in Dubai. Now, the chief of the Czech central bank, Michl, has said that he sees a strong argument to raise interest rates to contain inflation. Now, a potential rate increase could put the central bank on a collision course with the Czech prime minister, who's urged policymakers to lower borrowing costs. Well, the governor, Michl, joins us now for an exclusive conversation. Governor, thank you so much for joining us. Now, first, this is a big week because the ECB yesterday raised interest rates. Now, what kind of impact does that have on your country?
So good morning, Francine, and thank you very much for having me. So our next decision, which will be next week, will be based on our own risk assessment. So the ECB decision will not affect our next step. Our key rate has been 3.50 for more than a year. So we have not cut rates below inflation in this cycle, which is really important. So for us, all is not the problem. The real problem is that there is too much money in the economy. It was created by years of zero rates and negative real rates before COVID. And it was supported by fiscal deficits. So this is still pushing core inflation higher. So we have to stay hawkish forever.
So talk to me a little bit about, we're trying to analyze what's happening in the Middle East. And frankly, it's unclear because every couple of days there's negotiations. We're not sure where it ends. Sometimes it changes. How much real inflationary pressure do you see from the price of oil?
So wars tend to increase inflation, definitely. So they bring more spending, bigger deficits, and more pressures on prices.
Is that, could that be short-lived? Again, there's many questions on whether if Iran gets resolved, which, we don't know at this point, but if it gets resolved quite quickly, does it really help with inflation on the short side?
With the cost inflation, yes, but when I became governor of the Czech National Bank, it was in mid-2022, the inflation was close to 20%. 20%. So we reduced it to around 2%, and for more than 2 years from now, inflation has been close to our target. So we restored price stability, and we will protect it. But current inflation right now in the Czech Republic is 2.1 year on year. Rates 3.5 Yeah, so which is our big advantage. So our policy is already tight.
Yeah.
But we have to decide, or right now it's about to decide whether to switch to a tight policy. Yeah. And core inflation is 2.9%, and we are fighting with this core inflation right now.
But so, Governor, are you ready to support a rate increase as soon as next week when you meet?
I think a June move is now a real possibility. Mm-hmm. The case for a rate hike has strengthened, mm-hmm. and forever hawkish, mm-hmm. I would say. Mm-hmm.
Governor, I mean, one of the other things I want to talk about was Bitcoin, because in November 2025, of course, the Czech National Bank made its first ever purchase of crypto assets, mainly Bitcoin. Yeah. What have you learned so far from running this test fund?
Okay. So a central bank and Bitcoin, it's a strange combination, isn't it? Yeah. So most people do not put these two things together. Yeah. I do. So my logic or my philosophy is that in monetary policy, a central bank must be conservative. For me, that means hawkish forever, higher rates for longer. Mm-hmm. No quantitative easing, no currency devaluation. That's conservative monetary policy. But a central bank must also think ahead. And in operation, we must innovate. We must try to understand the future. That's why we created a test portfolio. Yeah. It's a test portfolio, not a revolution, not a political statement, a test. It's a $1 million test. Our FX reserves are 180 billion of US dollar. So we will run this test for 2 years, and experience, as you ask, I see only two possible outcomes for Bitcoin: very high value or zero.
Yes, but I mean, is this a surprise? Do you think that you're holding? I understand it's a test and it's only for 2 years, but what portion of the reserve could you imagine holding in Bitcoin in the future?
We will decide it after the test, after 2 years. Yeah. Right now, I would like to say that I'm not a crypto governor, definitely, because I expect a hard shakeout in crypto, definitely. There may be a wave of failures, but on the other hand, there will be strong companies and strong technologies which survive, definitely. So there will be some process of creative destruction in this part of economy. But let's understand the future. Let's create the future. I'm there for the future.
Governor, you're quite innovative. I mean, what you've done is very innovative. Also, on the change in reserve management, mm-hmm. is a shift to basically increase a portion of equities and gold.
Yes.
Right? And that's happened. What results is this new approach delivering?
So our investment horizon is infinite.
Okay.
So that's why we provide two long-term moves: increase equity allocation from 8 to 26% of our FX reserve, and we increase our gold from almost 0 to 6.5%, I would say, of our reserves. And the results last year, return was 10%. Same as Warren Buffett result. So far, so good, I would say. But 1 year is not enough, I would say, to judge a portfolio. Warren Buffett built his reputation, I would say, over more than 50 years. So ask me again in 50 years.
Yeah, I mean, I hope to ask you next year. I hope this is not in 50 years. But the portion of stocks, as I understand it, will also increase to about 30% of the total reserves by 2029. And a lot of that chunk is U.S. stock market. So what is, I guess, your strategy for U.S. equities, especially at a time where everything's changing because of SpaceX today?
So with the investment horizon, which is infinite, so we do not focus on short-term bubbles. So we stay with our strategy. So we have built the portfolio for the long-term future. We have a high expected return because of the stocks and because of the U.S. stocks. So the portfolio is for the next 50 years. So that's it.
Okay. I mean, do you worry about valuations in AI and tech in the U.S.?
No, I'm not focusing on short-term bubbles.
Okay.
Right now, it's a long-term portfolio for our kids.
Governor, really great to speak to you. Very refreshing view. Thank you so much for joining us here in London, in our studio. That was Alex Michl, the governor of the Czech Central Bank. Now, coming up, we'll speak to the chief executive of the AI drug discovery firm, of course, working to use artificial intelligence to extend human life. We'll speak to the chief executive of Insilico Medicine. That's next, and this is Bloomberg. Welcome back, everyone. Now, AI drug discovery firm Insilico Medicine is stepping up the quest to harness artificial intelligence to extend human life. Now, the company is really working with partners to develop what they expect to be among the first AI foundation models dedicated to human longevity science. Well, Insilico went public in Hong Kong last December amid an investor frenzy over China's biotech and AI boom. Well, I'm delighted to be joined by Alex Zhavoronkov, the founder and chief executive of Insilico Medicine. Alex, thank you so much for joining us. I mean, this is a booming space that people are really trying to figure out, understand, and possibly invest in. How does your approach, for example, differ from the likes of Isomorphic Labs and Xaira?
Sure. So Insilico has been around for a number of years, and it took us a while to build an AI platform that constantly delivers ultra-high quality therapeutic assets that have dual purpose. So we usually go after what we call pipeline in a product. So imagine a drug that can be purposed towards multiple indications, not just one. Then we try to get it approved for the indication with the highest probability of success, where we are more likely to outperform the standard of care. And then we try to take it as far as possible into the clinic or license it out and try to repurpose the drug into aging.
Right.
Because the core of our discovery engine is human aging. That's the problem that every one of us has, and everybody who is listening has. It's my biggest problem in my life. And if you can target aging at its core, get a drug approved for the indication, and then repurpose it towards more indications and get the maximum longevity benefit and even preventative therapeutic benefit, that would be the ultimate goal. Like, think about GLP-1s. GLP-1 as a target has been discovered more than 40 years ago. It became a drug very recently and became $1 trillion opportunity. So I am on it right now. I love it. So I want to develop the next one.
It's so interesting. So when you look at AI, we often talk about AI and productivity in your space, in your world. But this could touch, of course, drug discovery, preclinical drug development, clinical drug development, regulatory filing, marketing, or finding the right patients. What do you think the first, number 1, 2, and 3 benefits are?
So the number one benefit of AI is, of course, speed. So at the preclinical level, we now can beat the traditional approaches at least by 4 times. And it's not only AI, it's also the infrastructure that we usually use around the world. That's why deglobalization is very bad for us, because we need to use the labs around the world, distribute the workload, get the data back, and see if AI was right or wrong. So now I managed to get the time from 0 to developmental candidate, 1 step before clinical trials, to 12 to 18 months. My record was 9. Typical traditional approaches is 4.5 years. So it's faster, cheaper, higher probability of success, higher novelty, and then again, our unique property is aging. We have the performance metrics here on the
How convenient.
On the label.
This is a great marketing
So you can
tool.
see that, not marketing, productivity tool. So usually companies that you've named, they don't have a single one. Here I've got 30 developmental candidates, 3 are in phase 2. 1 phase 2 complete, planning to go phase 3, and everybody in the company wears one.
I mean, you should do that actually also, the World Cup should do it when they add a star if you win the World Cup. It'd be easier than having to buy a new football shirt every time. I mean, when you talk about a particular area of human health, I guess, that you want to focus on, and you say aging, I mean, is this to combat diseases? It's like, it's so wide. I wonder whether you have to approach it from a more kind of targeted clinical level.
Well, I have my personal philosophy and the company philosophy, and very rarely they properly convolute into a strategy that aligns with my vision, because my vision is to keep people productive as long as possible at their peak, so extending peak span. So imagine that you get to your ultimate performance level in a lifetime, and then you do not decline. You actually are either flat or even advancing.
Okay, is that an age? Is that an age, or does it really depend on biometrics?
So currently it is your chronological age, which pretty much defines how long you're going to function. No. And there are stats for that. No. In the ideal world, you should be able to reverse some of the age-associated damage, or most of it, and continue at your peak. Continuous improvement. Otherwise, life is very unfair. And but the therapeutic process, the development of drugs, is very different from our ideal world. So you have to target a disease first to get the drug approved. And the drug that is targeting aging must be powerful enough to modulate the disease so that you outperform the standard of care. That is incredibly difficult because you are not trying to fix something that is dramatically broken at like hitting it directly. But this indirect benefit must be outperforming standard of care. And that is very difficult. And then to be able to repurpose the drug after it gets approved into aging. So that's kind of one of my dreams, to be able to take my own drugs regularly to reverse some of the aging.
Alex, I mean, this is so interesting. And I wonder how you think about, you're basically talking about longevity and healthy aging. But I don't know whether there's a contradiction with also job availability and the fact that if you stay in your job for too long, then the youth can't come up the ladder.
Well, right now people are actually not reproducing as they used to. So the population of developed nations is collapsing. If you can extend the life and productive life of as many people as possible, you're going to have very productive labor. Also with AI, you have massive opportunities for enabling people who are retiring or even retired to go back into the labor force. So their skills, their intent, their work ethic, their values may be contributing to the society in a much more profound way than people who may come into the labor force later.
Do you think we'll really have some kind of big breakthrough on what your hope and dream is in our lifetime?
I think in our lifetime, we're going to have many breakthroughs. On the immediate horizon, I don't see a single drug that can extend your life by more than 5 years as a healthy individual who is already optimizing, sleeping, not overeating. However, I think that within the next 10, 15 years, we have the chance for massive breakthroughs. Okay. I run a conference in this area. Everybody is coming there every year from all over the world to discuss the recent advances. And we usually look at the horizon of 10, 15 years for drug discovery and development. And many of the discoveries that have been made last 10 years may actually get you more than 10 years. So we might be at the longevity escape velocity right now. We just need to execute.
Alex, thank you so much. What a great conversation. I'm also a little bit jealous. I might do the same for the Pulse team with a number of newsmakers and update that every couple of months.
Stats are good.
Stats are good, and Bloomberg's a big believer in data. Alex, thank you so much for joining us. Alex Zhavoronkov, founder and chief executive of Insilico Medicine. Now, Switzerland is set for a nail-biter referendum on Sunday on a proposal to cap the population at 10 million. It's an unprecedented proposal which has never been tried by a modern economy. Rudolf Minsch, chief economist at Economiesuisse, which represents the interests of thousands of Swiss companies, joins me. So, Rudolf, first of all, how do you see it? I mean, this is tight. It's a tight referendum, but it could really change the composition of the Swiss economy for a lifetime, for years and years to come. How are people thinking about this?
The initiative wants to cap the population at the size of 10 millions, but this threshold will be reached only in the early of the 40s or in the late 30s. So it takes quite a long time until the threshold is reached. So for that, we do not expect initial consequences, merely planning uncertainty, what happens in the future, but no initial consequences, because the population size at the moment is around 9.1 million, so it takes quite a long time until the Swiss population will reach this 10 million threshold.
I mean, Economiesuisse is Switzerland's largest business lobby. So what are the contingency plans for your organization if voters back the 10 million cap?
So obviously, it's not a good idea to cap the population at the 10 million threshold. We need flexibility, and the Swiss economy depends heavily on foreign workforce, say in the labor-intensive sectors like restaurants, construction, or the whole healthcare system, but also on innovation. Switzerland is an innovative country, so we need to have foreign talents, and up to now we have the privilege to be attractive for foreign talents coming from all over the world to Switzerland to join the workforce here, to create new patents, to doing some research and developing new products and services. And this this openness is under threat.
Swiss companies have been quite vocal that the cap would severely restrict their ability to recruit the talent they need. Which companies, or will companies, leave Switzerland if voters back this cap?
As I said before, we have these labor-intensive sectors. They fear they do not be able to hire enough foreigners to maintain the level of services or producing products in Switzerland. So that, To add a word, it's the main issue about the initiative is planning and certainty. We have time in Switzerland to develop proper measures, to implement proper measures, but there's some planning uncertainty also. What will be the reaction of the European Union if there would be a yes? So we have to explain that initially nothing will happen, and we continue with the bilateral agreement with the European Union.
I mean, nothing will happen initially, but do you see, I mean, if companies were to leave, what sectors would leave first?
Probably it's not that easy, because we live with such initiatives over decades. And in Switzerland, we have a saying that the soup is not eaten that hot that it is cooked. And therefore, the enterprises do expect that Swiss policymakers do not going to implement this initiative in a really strict way, as it is written in the text. So there will be some in the future some pragmatic solution and finding some ways that the openness of the Swiss economy maintain and the ability to attract foreign workers will remain.
Rudolf Minsch, thank you so much for joining us. That was, of course, Rudolf, the chief economist at Economiesuisse. Up next, it's Bloomberg Brief, and this is Bloomberg.